In today's video, I'm going to be going over Ethereum to the US dollar. I'll give you my outlook on where I think the price of Ethereum is actually headed and when we're going to pull back. And when we do, where are we going to pull back to? Now, just a disclaimer that I do hold a lot of Ethereum and I've been holding a lot of Ethereum for a very long time. So I myself am also looking for a peak. I'll do my best in this video to hold my biases away from my analysis so that I can make sure that I'm making a good trade and I'm giving you informed decisions. A couple months back when Ethereum was around $1,800 or maybe it was around $2,000, I was predicting that Ethereum would run to about $3,000 and that was the peak I was actually looking for back then. I thought we were kind of in the final stretch upwards and $3,000 seemed like a very good spot for us to peak. Now we did end up getting to that $3,000 target, but obviously we've blown way past this now as we're approaching $4,000 on Ethereum. So it's time to take another look and figure out where we're heading. Now before we get started, do me a favor and click that subscribe button below. This helps me out a ton and I really appreciate all of your support. And also, if you want to trade with me and others, I have a link to my Discord in the description below. Feel free to click that and come check it out and trade and hang out with us. So now let's actually dive into the chart. If you've watched any of my previous videos, you know that when I have a blank chart like this, I like to just start off with simple support and resistance lines. These are essentially just spots where price has stalled in the past, either on the upside or as we're falling downwards, where did we end up catching that price as we're falling? I think one of the very obvious key spots that I want to add to my chart to show you an example of this is just our all-time highs from before this current run. So our 2017, 2018 all-time highs back here, around $1,400. If I just hover this spot and then put a horizontal ray there, you can see that of course that is the resistance here as that's what we're charting. But then when we came to it over here in the beginning of 2021, we resisted it multiple times throughout this whole area before we ended up breaking through. And when we did break through, we ended up coming back and retesting the same exact pink line. Now there's a couple wicks that are just below this line, but it's a generally good area for where we had resistance to the upside and we supported it on the downside. Now for all of the price action that's below this $1,400-ish line that I just drew, I'm sure there's a ton of great support and resistance lines you can draw into this area, and if you want practice, definitely go do this yourself. However, for now, I don't think that's useful to have on my chart. I'd rather have my chart as clean as possible, so I'm only going to put the important support and resistance lines on my chart. If the price starts to fall downwards, 1400 is a very far way down right now, and so even if we started to head down into the low 2000s, that's when I might even consider to put other support and resistance on my chart. But for now, there's really no point in putting the ones below this onto my chart. Let's just look at our current price action and add any throughout this area. So the very first one that I can see into here is when we peaked around $2,000 in February in here. If I just draw a support and resistance line right about there, you can see that of course it's the resistance through here. It almost resists perfectly into here, just a couple dollars off right there. And then we broke through it on this candle and we actually supported it for quite a few days into here in early April before we continued upwards, came back down and supported it again a couple times through here before a huge run up to where we are right now. Now again, I think there's a couple other lines you can draw in between the two pink ones that I have right here. For example, if I hover my mouse right here, you can see how significant this spot actually is. But again, let's just keep our chart clean. $2,000 is still a far way down, and if we start to fall, then I'll consider adding more into here. Now to the upside after this $2,000 support and resistance line, there's actually not a ton of spots that we can properly label because Ethereum has just been wildly exploding to the upside. There's essentially no resistance all the way from here upwards. However, I do see a small line we can draw through here at our peak in April here around $2,500 because we did reject it through here, pull back, reject once again, pull back again, and then finally break through. And there's one candle that kind of wicks down to it on the daily right into here. If I just zoom into that, you can see that this wick kind of comes down and almost touches that pink line through here. And maybe we can even adjust this up a little bit so that we are better catching these wicks and that wicks. Doesn't matter too much, but you can see that we did reject it quite a few times and use it as support through here. And then like I said before, once we broke above this 2550 support and resistance line, we basically haven't paused anywhere. We had a little bit of a pause through here, but we didn't have any sort of pullback at all. We've just been running pretty strongly all the way up to nearly $4,000 since this 2550. So at this point, I don't think we can really add any other support and resistance lines that we'd expect to be strong. The next thing I'm going to use here is something called Elliott Wave Theory. Now, if you've watched my previous videos or my playlist tutorial on this, then you know quite a bit about Elliott Wave Theory. If you haven't, I'm going to give you a quick introduction, but realize that the playlist is actually 10 videos long and it's over 2 hours of content. So trying to summarize it here quickly isn't going to give you all the information you might want. However, let me brief it. In Elliott Wave Theory, it basically states that the market trends in waves of 5s, and those waves will look something like this, where the 1 and the 3 and the 5 of this 5-wave trend are pointing in the upwards direction or the direction of the trend, and the 2 and the 4 are pullbacks. Now, once you have this 5-wave structure that gets put in the market, then we get an ABC pullback that's counter trend, and it looks something like this, where the A and the C are the 2 counter trend waves, and the B actually goes in the direction of the 5-wave move that we previously had. So basically the market trends in this 8-wave structure, and this kind of happens over and over again. So once we have an 8-wave structure that looks something like this, it actually just makes up another 1, 2 on a larger degree. So inside of this first white 1, 2 that we have right here, we actually have a smaller 1, 2, 3, 4, 5-wave structure inside of the 1, and then another A, B, C structure inside of the 2. And you can see how this continues to expand on larger and larger time frames, as well as contract on the smaller time frames where the waves are inside of each other. So I'm going to use Elliott Wave Theory here to kind of predict where are we inside of that 5-wave structure on the largest possible degree. Looking at all of the price action and all of the price history that we have on Ethereum, where are we inside of those 5 waves? Now, back in 2017, I think there was a good case to be made that this was some sort of 1, 2, and this was our 3-wave in 2017 here, and we were working on the 4-wave, and then we were going to get one more push upwards. However, the timing of the waves is super important as well. If this was the 3rd wave, we can now see that the 4th wave, which has to be the next bottom in the market, would have to be all the way out here, and we'd be working on the 5th wave on a macro level here, on a time frame where we can see all of the price action. Now, if we just look at that, the length of the 3rd wave in terms of time is from about June 2017 to January of 2018, so about 6 or 7 months. And then the length of the 4 wave would have to be from January of 18 all the way through March of 2020, or a little bit over 2 years. You can see just how asymmetrical that time actually would be, and even with it drawn like this, you can see how much longer the 4 is than everything else. In fact, the 4 is actually longer than all of the price action leading up to it, all of the 1, 2, and 3. Now, this doesn't really sit well with me, and it doesn't really make sense. So I'll show you what I think is actually happening here. I think that all of our price action to the 2017/2018 peak in here is the 1 wave on a larger degree here. And that means that I think the 2 wave is the bottom here, our March 2020 lows. All of this price action is kind of our A, B, C as I was showing you before. What that means is I think we're in the current 3rd wave of the crypto market right here. And after this 3rd wave, we'd get that 4th wave, which is a pullback, and then a 5th wave, which goes higher. This is, of course, not drawn to scale, and these are not my predictions of where these things are. For now, I just want to show you roughly what I'm thinking. Now, you can see that the timing of the 1, the 2, and the 3 look pretty good now. We don't have one of the waves way longer extended than any of the others. Yes, this 3rd wave is only about a year in timing right now versus the 2 years for the 2 wave and the 2 years for the 1 wave. But it's much, much closer than the 3 to 6 month 3 wave that we had before and the 2.5 year 4 wave. So let's roll with this. I'm actually going to turn the wave off of this now just to keep my chart clean. And what you can see is that we're looking for this 3rd wave peak. Where is this actually going to land? And then where is the 4th wave going to pull back to? And finally, our 5th wave, that's going to be the peak of everything before a huge correction that comes after it. But that's a long ways out. Let's look and focus on the 3rd wave for now. So I have this zoomed in now from the bottom of our 2 wave here through all of the price action that we currently have. What we need to do is actually find another one of those 5 wave structures inside of this 3rd wave, because I told you that all of the waves are made up of smaller waves inside of them. And a 3rd wave has to have 5 waves inside of it. It's one of the key rules of Elliott Wave Theory. So right off the bat, I think the count is relatively straightforward. I think that our first push upwards here from our March 2020 lows to roughly August or September of 2020 is our 1 wave, and then we get our first pullback into here as our 2 wave. I think our run all the way up through February of 2021 when we broke $2,000 is our third wave. Now that would make our fourth wave pretty shallow in time, but let's go with that for now. And then I think we're working on the fifth wave here. Now I'm going to turn the degree down on this because it needs to be a smaller degree than the white 5 wave that we created before it, and we'll change the color just to distinguish them. Now the timing of these waves actually don't seem that good in terms of the 2 and the 4, because the 1 wave is about 6 months long, and then the 2 wave is just a couple weeks to maybe a month, or maybe we could even stretch the 2 wave out to be one of these other lows into here. It doesn't technically have to be the lowest low in there, but it should be pretty close to the lowest low. So it's sometime in September, October, or November, so it is only a couple of months still, but I think it's still pretty valid so far. And then we have a third wave that's about 4 months long, and unfortunately our fourth wave only looks like it's a couple weeks long into here, which again is not the best timing wise. And now we're working on the fifth wave, which has been about 2 months so far. So technically none of the rules of Elliott Wave Theory talk about timing and how long each of the waves actually be, but there are some other rules and guidelines we do need to follow. So let's use these guidelines to actually validate some of these waves. Now, one of the first guidelines to validate the 1 and 2 wave is that the 2 typically falls on a Fibonacci retracement between the 0.5 and the 0.618. This tool is essentially just telling you what percentage are we pulling back of the move that you're measuring. So if we have a move that goes from here to here, we click our Fibonacci retracement at the bottom and the top, and if the price ends up going to the 0.5 here, it means that we've pulled back half of this distance, or 50% of it. So like I said, we typically want a 2 wave to fall at that 50% or somewhere between that 50% and 65% retracement. That's the most likely spot. However, it's not impossible for it to fall shorter or more than that, and it's still okay. That's just where we would prefer it. So diving into our 1-2 right here, let's pull a Fibonacci retracement from the bottom of our 1 right here to the top of our 1 and pull it sideways. Now, as I told you, we want the 2 wave between this red and gold lines into here. However, because Ethereum was so bullish, we actually don't have that deep of a retracement anywhere throughout any of this price action. Regardless of where we think the 1 top might be, if we thought it was this wick through here, you can see that doesn't make it deep enough. This one wouldn't make it deep enough. This is actually one of our deepest retracements that I have. And the 2 wave actually falling at this 382 or 38.2% retracement of this move is not actually that uncommon, especially in a bullish market. So we'll go ahead and leave this. This is pretty valid for a 2 wave and looks pretty good so far. Next up, let's validate our third wave. Now to validate a third wave, we're going to use this trend-based fib extension tool. This essentially measures the relative length of one move to another. So if you were to click once and twice, you're capturing the length of a move in those first 2 clicks, and then your third click measures it relative to those first 2. So again, if we have a move that looks something like this, and we click our trend-based fib extension tool from the bottom here to the top here, we're capturing the length of this yellow arrow, and then our third click down here, if wherever we put that, that's what we're measuring relative to. So if we put our third click at the bottom of the yellow arrow also, you can see that it lines up perfectly with this pink 1 or 100%. In other words, the length of the first 2 clicks that we had, which for us is the length of the yellow arrow, is exactly the same as the length from the bottom of our arrow, which is where our third click was, to the top of the arrow. Now, of course, that's obvious, but we're going to use that to validate the length of the third wave and how it measures relative to the length of the 1 wave. So let's click our trend-based fib extension tool at the bottom and the top of our 1, just like we did with the Fibonacci retracement, and we're going to put our third click at the bottom of the 2 wave, and I'm just pulling it sideways so you can see how it lines up. So again, if our price came to this pink line right here, it would mean that this move from here to here is equal to this move from here to here. And I'll show you that with an arrow as well. We'll draw an arrow from here to here, and then let's just simply drag it to where our third click was, the bottom of that 2 right there, and you can see it's right at that pink 1.0, which would mean it's 100% or equal in length. Now with a third wave, the most common spot for it to fall is actually between this 1.618 and this 1.75, or 161.8% to 175%. In a bullish market, I have some of these other trend-based fib extension targets already set up for me. So when something is really bullish, we do often see this 2.618 as the secondary target. And you can see we came up to this spot pretty nicely before a huge pullback from about $1,350 down to $900 or so in here. But it didn't end up being top of our third wave right here. So our next target, and this starts to get into super bullish territory if we hit these targets, is our 3.618. And you can see once again, we have a wick right at this target and a pullback from about 1750 down to about 1500 here as we came to this third target. But we did end up finally pushing through it once again to one of my top targets in here, the 4.236 or 423.6%. And you can see we wicked this level almost perfectly at the top of our third wave right here before a pullback from about $2,000 down below $1,300. So while it's not in our most likely zone here, in a bullish market, I'm happy to see that it's exactly at one of these other fib retracement levels. This helps validate our third wave, and I think we can move on. Next up, our fourth wave. We're going to go back to Fibonacci retracement for the fourth wave, and typically with the fourth wave, we want to see it between this blue and red lines, or between the 382 and the 0.5. So let's pull that from the bottom of our third wave to the top of our third wave, and see where a fourth falls. And you can see it's right between those two targets. This is the ideal spot for a fourth wave. It's absolutely perfect. It's also holding pretty strong at this previous support and resistance line that we've drawn in pink here. This is perfect for the fourth wave, and we'll move on once again. So far we've validated the 1, 2, 3, 4. Now we're looking for the fifth wave. Now there are a couple different ways we can validate fifth waves in Elliott Wave Theory. The first one is that often the one wave and the fifth wave are equal in length. So let's use our trend-based fib extension tool once again, click at the bottom and the top of our one wave, and then at the bottom of our 4 or the start of our 5. Now in order for them to be equal in length, we would have come up to this pink 1 line here, and you can see we're obviously way past that. I do have some other targets that are common for 1 to 5 ratios, like this 1.618 to 1.75 zone that we talked about earlier, this 2.618. However, once you start to get past that, we need to use some other type of rules. You can see we've blown through all of the key levels on my trend-based fib extension here, so let's try something else to figure out where the fifth might peak. The next thing we can actually try is to measure the length from the start of the 1 to the top of the 3. Now often, the 0 through 3, which I'm clicking here, measures relative to the length of the 5 at either a 0.618 or a 1-to-1 ratio. So let's measure the 0 to 3 and click at the bottom of a 4 once again, and this 0.618 and 1 are our first two targets for where the 5 should land relative to this 0 to 3 pull. And we use this rule when the fifth wave is extended, or it looks like the fifth wave is one of the more bullish waves. And as of right now, that definitely does look like the case. However, we've actually blown through both of these first two targets as well. The third target we'd actually have for this fifth wave, based on the 0 to 3 pull here, is between this 1.272 and the 1.414, which is where we're actually sitting right now. So I am going to draw a box into here as a potential target zone, and we'll see if anything else lines up. We also want to draw a box between those other values that I mentioned earlier, the 1.618 and the 1.75, and let's see if we can find confluence into either of these zones, or other tools that agree with this. Next up, let's do one more trend-based fib extension pull of the length of the 3 relative to the length of the 5, and look for some of those same key targets. So the bottom and the top of our 3 is our click, bottom of our 4, and pull that. And it looks like our first box that we had drawn actually has the 1.414 of this new pull right in the bottom of the box right here. So that does add a little bit of confidence that maybe we're in the right area right now. The second box that we had drawn doesn't really have any of the other fib pulls inside of it. So we gain a little bit more confidence in this box right here, but let's try and find a little bit more. I'm going to use a Fibonacci retracement once again on the 3-4 pull that we had before, so from the bottom to the top of our third and pull it sideways, and I like to use some of these negative values on the Fibonacci retracement as well. These are basically the same as the positive values, but then flipped on top of itself. So if we grab the value of the retracement here of the 23.6%, and then we just flip this arrow around or move it upwards like this, you can see that the negative 23.6% is the same thing as the 23.6%, but above the 0 instead of below it. And I have 3 targets that I like to look for on the negative side, and then this negative 236, this negative 618, and this negative 1. And you can see the negative 1 actually, once again, lines up inside of our box that we're currently on. So now we have 3 points of confluence that maybe this box is going to be the peak of our fifth wave. The very last thing I'm going to do here is actually dive into the waves inside of this yellow fifth wave, because remember that all waves still have waves inside of them. So let's zoom in just a little bit and we'll look at our price action inside of this fifth wave right here. Once again, we need to have 5 waves inside of this yellow 5 waves. I think the very first wave right here is very clear, a 1 wave to our peak right here, and you can even see 5 clear waves inside of this 1 wave right here, which is a good sign. I won't label it, but you can see that it's 1, 2, 3, 4, 5 to make up our 1 wave, which is good because, again, waves inside of waves. I see a very clear A, B, C into a 2 wave right here. I think our 3rd wave is actually this peak into here because I think our 4th wave is an A down right here, a B up here, and then a C back down into here, making up our 4th wave right there. And I think we're in the 5th wave of this 5th wave right now. So again, let's turn the degree down. Let's change the color so we can reference it differently and save that into here. Now I'll quickly verify some of these waves as well. Fibonacci retracement to the bottom and top of our 1, and you can see the 2 falls really nicely at this golden zone right here between the gold and yellow lines. That's perfect for our 2 wave. Fibonacci extension for our 3rd wave, length of the 1 to the bottom of the 3 here, and the 3rd wave falls just shy of this zone right through here that we'd love to target, but it's pretty solid. It's almost at that. We're only about $40 off, so pretty good for a 3rd wave. And then one more Fibonacci retracement, bottom, top of our 3rd wave for our 4th wave. And you can see where we have labeled the 4 in here actually falls to that 0.5, that red line, almost perfectly within $1 or so. So as a quick verification, this 1, 2, 3, 4 looks good. Let's do the same exact things to predict where this blue 5th might end up landing. So once again, a fib extension from the 0 to 3 pulled to the bottom of our 4. And we've gone past that first target between the 1.272 and the 1.414 into here, and we actually have the 1.618 once again inside of this first box that we had drawn, so that gives us even more confluence into here. And let's measure the length of the 3 relative to the 5, so trend-based fib extension, bottom, top of the 3, bottom of the 4. We've actually gone past some of the key values here. We do have the 1.75, which falls into here, but we're a bit above it right now. The 2.618 is actually in our secondary box, so it does give it a little bit more support if we do end up going up there. And I think that's a pretty good place to leave it. I do think Ethereum is close to a peak, and it's possible we peak somewhere in this range from about 3,800, which we're actually already above, to about 4,070 right into here. Now you could continue to dive down and look for 5 waves inside of this blue 5 as well. And I do see 1, 2, 3, 4 kind of clear in here, and I think we're working on the final 5 wave of this blue wave as well. So to me, it does look like a peak in Ethereum is pretty close into here. The other thing I'll be watching is just the price action of the daily candles that we're putting in. You can see that the price action of yesterday's daily candle, this huge green bar, looks super bullish for now. And as of now, it looks like we're actually creating a doji after it, which would label a bit of uncertainty in the market. If the next candle, tomorrow's daily candle, starts to be red and retrace a good portion of this green candle right through here, that would be yet another sign that maybe our peak for Ethereum for now is actually in. However, if we continue to trend sideways right under or at this $4,000 level, it looks like it's just preparing for yet another push, and maybe we'll come into this secondary box right into here. So if we zoom back out, what does that actually mean? It means that the 3rd wave here, this white 3, is going to peak somewhere in one of these areas as it looks right now. And so after that happens, we do need this white 4th wave to end up coming in. Now remember that the 3rd wave has been a little over a year in time, so I'm expecting the 4th wave to be pretty long in time as well. Now typically when the 2 wave is long in time, it does mean that the 4 wave is actually going to be quicker in time than the 2 wave looks. So we might get a bit of a steeper or shorter 4th wave into here. However, to predict where we think it's actually going to fall, let's use our Fibonacci retracement, just like we've done many times, and pull from the bottom to the top of our 3rd wave. And I'll just assume for now that the 3rd wave falls at the top of this box right here, around $4,070. We'd be targeting our 4th wave to come down to this 382. That's our key spot that we've been looking for. In other words, if Ethereum does peak around $4,070, we'd be looking for a multi-month retracement down to about $2,500 on Ethereum, where I think that would be the next best buying opportunity. Because after this happens, we're going to get that 5th wave to come in, and who knows how much higher that's actually going to push. For now, I won't put a prediction on that, but as we finish our 3rd wave and work on our 4th wave, I will work on and release a video on our 5th wave prediction. So make sure you subscribe and hit that bell so that you don't miss when this video is released. So that's my Ethereum prediction. I think we're actually pretty close to the top of the Ethereum run that we've been having that started around $100 in March of 2020 and now is reaching about $4,000 as we sit in May of 2021. I don't think this is the end of Ethereum, but I do think we could get $1,000 or $1,500 pullback sometime soon on Ethereum before our final and huge push upwards. Now, if you made it this far, thank you so much for watching. Once again, if you could do me a huge favor and click that like and subscribe buttons below, it really means a ton to me and helps support my channel. And if you want to ask me more questions or trade with me, check out the Discord in my description below. And with that, as always, good luck trading.